My name is George Matthew. This is my colleague Osman Khan, and we're here to present ourLibra, an automated financial advisor for middle-class Americans. For those of you who serve retail banking customers, you likely struggle with a huge problem. And that is that you offer depository services to your customers, but it's unlikely that you offer financial advisory or financial planning to your customers on a regular basis. And most likely, you no longer offer an unsecured consumer lending product to your customers for amounts less than $10,000. And the issue here is really one of cost. With the average American family earning about $55,000 a year and with no investable assets, there's just not enough money there in their income or their assets to support a financial advisor to give them advice, unbiased advice, on a regular basis. And then as far as consumer loans go, the traditional costs associated with origination and underwriting of loans make it very difficult, if not impossible, to offer consumer loans at rates that are profitable to you and yet meaningfully different from credit card rates. And so, you know that your users or your customers are desperate, though. They're desperate for quality financial advice. And sure, there are articles, there are blogs, there's tutorials, and there's even games out there to help them learn about personal finance. But let's face it, they don't want to spend hours of their precious time learning the intricacies of personal finance. They'd much rather spend that time with their family or pursuing a hobby or sport that they enjoy. And we can see the result of this in our society and in political discourse. Middle-class America is frustrated, and they also feel like the banking system just isn't there for them. And so here's the solution, ourLibra. ourLibra is an automated financial advisor that users can come in, they can link all of their accounts, and you can white label this with your own institution's branding, and so it looks completely like it's an in-house solution. We are able to link to over 5,000 institutions across the United States. If you see in this scenario, for this user has linked their checking accounts, retirement account, 401k. If we scroll down, you see that there's their, how much they would like to keep in reserves, credit card, mortgage, auto loan, and student loan. So it's pretty typical. If we scroll back up, you can see, very simply right at the top, the system basically takes all of this data and uses their balances and their after-tax rates, and then comes up with what's the optimal thing for them to do. In this case, it says that this user could pay down some high-interest debt, and it tells them the savings associated with that. So it's something tangible for them. If we click the advice button there, you'll see basically it shows the advice in simple language. At the top, it says the savings associated with it. Now, this is all driven off of, there's default assumptions as far as tax rate, projected investment returns, and how much to keep in savings. But users can personalize all of this to their own personal needs. And based on those settings, along with the live data, the system then generates this advice. So in this case, you can see that the user is basically has some excess cash in excess of what they would like to keep in savings. And the system says exactly to the penny how much they should move from one account to another. And in this case, it's their highest interest rate credit card debt to pay off that debt. And then on the next one, you can see that there's an opportunity for them to pay down some additional debt with what we call a Libra loan product, which is one of our products. We'll get back to that in a moment. And then if you scroll further down, you can see that that's actually it. It reminds the user to pay, make sure that they pay their minimum balances and continue making their regular payments. The reason why the system is saying that for this user is that their other debts are at rates on an after-tax basis that's lower than what the user believes they can make in their investment account. So in this case, it does not tell them to pay off all their debt. It's actually going to wait until it sees that the high-interest debts are paid off. And when it sees that it's paid off and there's no longer any recurring debt, it'll actually recommend that they can optimize their 401k. So it'll actually tell them how much money each month they should be putting in their 401k and how much money to put into a retirement account. If they don't have a retirement account, it'll actually suggest a retirement account. Or if this is your product, in-house product, it can actually recommend other assets or other accounts that make sense for the user. For some reason, the user thinks that the stock market is going to be really bad. They can actually put in a very low investment return or even a negative return, and the system will actually tell them to just start paying off all their debts. So, depending on if you're aggressive or conservative, it'll actually tailor to your needs and your balances. If we keep scrolling down, it actually shows you, all of the accounts that are used for this analysis, the reserve target, the after-tax rate, the before-tax rate, and the availability. There's also the ability to click in and see exactly step-by-step what the system is doing. So you can see the algorithm is actually completely transparent. We don't believe that personal finance is rocket science or a black box. It's, this system is basic corporate finance applied to a middle-class balance sheet. So now let's go back up and let's talk about the Libra loan. The Libra loan is a product that we came up with for our 15,000 users. Basically, about half of all Americans have recurring credit card debt. And that credit card debt, on average, is less than $10,000, and it's around 20% interest. And so this product can be replaced with your own product, and the system, just like here it showed, would actually show your product when it makes sense for the user. And this is one of the key things about ourLibra is we don't just throw products at users. We only throw products that make sense for the user-specific situation. In this case, this is our proprietary loan product that we offer to our customers. And what's interesting about our product is that we use the same data. We're pulling in all of their live data. And then based on that data, we can actually get the real sense of what their income and expenses are, as well as we can see if there are any bounced checks, late payments, income and expense fluctuations over time. So we get this great underwriting data for the loan without ever asking for W-2s, physical bank statements, et cetera. And there's no human intervention. We pull that all in automatically. That allows us to dramatically lower the costs associated with origination and underwriting. And with those lower costs, we can then offer a rate to our customers that makes sense. So going back, I hope we've showed to you that we can solve these two problems that you face. And if you're doing retail banking, please come and meet with us, and we'd be happy to talk to you. Thank you.